Hey guys, welcome back to another video, and today we're going to be going over liquidity sweeps, and running liquidity. So what is liquidity? Well, let's first start off with the market does two things. It either is trying to rebalance fair value or it's seeking liquidity. Now, what does that mean? Liquidity is the highs and lows in the market. That's what liquidity is. So we can just mark them out really easily. Go highs here. Let's mark that out with that's better. So we have highs here. We have highs here. We have lows here. We have lows here. We have lows here. Okay, and now let's go over what price does when it reaches these levels. So we'll start right here. So this is a high and this is liquidity. What it does right now is it comes in and it goes back out. That's called a liquidity sweep, when price just comes in to a high or a low and reverses. Okay, it's sweeping this liquidity. Okay, over here, what do we do here? Do we reverse? No, we don't. We run right through it. That's why we call it running liquidity. We'll make a fair value gap overlapping with it, which is even better. And we run right through the liquidity. So we're not sweeping that. And as you can see, we retrace back into this fair value area. We're going to go deeper into that later. But what do we do here? At this liquidity point, at this low, we sweep liquidity to come back into this fair value area. But we'll go over fair value areas another time. Now, let's go over some more sweeps. Okay, let's see some more sweeps right now. All right, down here, liquidity. Come in and we sweep it. We continue higher. Come in, we keep testing this level, but we sweep it at first. Where do we have over here? Let's see, right here, perfect sweep right here, wick sweep. Wick just comes in, sweeps this liquidity, and continues lower. Now, why is liquidity so important? Is because liquidity is going to be your target during a trade. You can target fair value gaps, you can target order blocks, but the best to target is liquidity. So that's why we're learning everything. Fair value gaps, we've learned. We're going to go over fair value areas and order blocks and liquidity. And we're going to bring all of that together to make a strategy on how we can target liquidity. We can even target fair value gaps. I don't personally do that. I only target liquidity, but some people do that, so you could incorporate it into your strategy. But yeah, let's keep going over some examples. Now, I was thinking about me explaining what liquidity is, but to be honest, if you want to learn that, go learn that off another video, what liquidity is exactly and why the market moves to it. But for me, it's pointless information, because liquidity for me is just, it's on the chart, you know, like we see sweeps, we see runs. That's all I care about. I don't care what it does, what it means. I know what it does, I know what it means, but it doesn't really matter. You know, it's not something you really need to. You can learn it if you want to, but it's not that important. All you need to know is that the market is either doing two things. It's rebalancing a fair value area, which we're going to go over in the next video, or it's seeking liquidity. So let's go over it again. What is liquidity? Liquidity is highs and lows. Here we have a high. Here we have a low. What do we do at this low? Let me just delete some of these. We run through this low. What do we do at this high? Well, we haven't reached it yet. We haven't reached that high yet. But for example, this low, what do we do? Are we running past it? No. We sweep this low. And let's go for a little fun tip. A little bit more advanced, but you guys would like a little fun tip. So how do we know that we're going to be sweeping liquidity or running liquidity? Well, this has to do with fair value gaps. Everything has to do with fair value gaps. If you go over my fair value gap video, you see how I love fair value gaps, because they tell you everything about the market. See right here, we coming into this area. We could have made a fair value gap right here. We could have made one. We had an expansion candle right here, and there we failed to make that fair value gap, and we saw this sweep right here as well. Another sweep. Okay, we failed to make that fair value gap right there, and that's how we could tell that this is most likely a sweep. Now let's look for running liquidity. Right here, we come into there and we're still making fair value gaps to continue lower. Let's go. What else? Right here, a perfect example. We come into this liquidity. Do we reject off of it? No. We make a fair value gap overlapping with the low. It's overlapping, which means we're running it. Let's go over here. Let's just say this expanded past here. Okay, let's say that was liquidity sweep, right? Just for the sake of this video. As you can see right here, we had the potential of making a fair value gap. We were starting to make a fair value gap. We could have made an expansion candle again and created another fair value gap. But what did we do? We failed to make that fair value gap, which is a sign that we're going to sweep this liquidity. So yeah, that's basically all there is to it. I mean, it's just highs and lows. It's also the highs and lows of previous candles. So for example, when you go into higher time frames, let me just do that real quick. When you're doing your analysis at the start of the day, you'll be able to do, will be on higher time frames. We focus on liquidity sweeps on the daily, but we don't actually, because these liquidity sweeps of these highs and lows take forever. So what we can focus on is the liquidity sweeps of the previous day. Are we running the previous day or are we sweeping the previous day? And that can give us an indication to where price wants to move later. For example, we see right here, we're on this day, we could have made an expansion candle right there. We're expanding right here. We're trying to make a fair value gap. But then what do we see the next day? We see a sweep and we failed to make a fair value gap. That is a sign that we're going to go lower. That means the probability of the next day going lower is much higher. For example, let's go over here. What do we do here? We have this low right here. Do we sweep this low? No, we expand past this low, which gives us a sign again that we're gonna want to continue lower. We don't sweep it. Right here, what do we do here? We sweep this high, and what happens? We continue going lower. At least for the next candle, it's much higher probability that the next candle is gonna continue lower if there's a sweep of a high, obviously. And if we're running low, it's also an example that we're going to keep going lower. So even sweeps and liquidity sweeps can tell you, can give you your daily bias. Like I know a lot of people focus just on sweeps and they find their bias. And if you don't know what a bias is knowing if you're going to be bullish or bearish that day, if you're going to trade bullish or bearish. But yeah, that's basically all there is to liquidity sweeps. It's just highs and lows being taken, and it's either running liquidity or sweeping liquidity. But yeah, that's all there is really to it. And we're gonna go more into liquidity sweeps and everything once we incorporate the fair value gaps into it. And I'm really excited to explain it all because I love trading, and explaining it just makes me happy. I mean, talking about it just makes me happy. So I can't wait to get into all the further information that I have to give out. But for the moment, that's it. That's liquidity sweeps for you. And if you really want to know why liquidity sweeps happen, you can leave a comment. I can make a video explaining why they happen. But I feel like it's not really knowledge you need to know, and it's not that important. You just need to be able to spot them. Like this is like homework for you. You just hop onto a chart and look for liquidity sweeps. And look for sweeps and just mark out. All you have to do is mark out highs and mark out lows. And look what price does when it reaches these highs and lows. Does it sweep? Does it run? Does it consolidate? Just look at it, okay? Just spend your time looking at it, because by now what you should be able to do is open a chart, see the points of liquidity, and see fair value gaps, and see highs and lows. That's where you want to be at right now through the stage of this learning. With the videos I've put out so far, that's what you should be able to do. You should be able to point out highs, lows. You should be able to point out fair value gaps. You should be able to point out sweeps and runs. Okay. But yeah, that's it for today. That's liquidity sweeps. And the next video is either going to be on fair value areas or order blocks. And yeah, so thank you guys for watching this video, and I'll see you in the next one.